And I think we'll do one more. Zero Hedge has us covered over here. U.S. home prices hit peak unaffordability as prospective buyers are now better off renting. So hold on. Even though rents are high, you're telling me it's better to rent than to buy. Right, well, I've been talking about this. The housing market, all-time highs, they're raising the rates. When rates go up, that means your mortgage rate goes up. The house has to come down in price to meet that person's monthly income level, right? That doesn't change. People don't, oh, great, the Federal Reserve raised the rates again. I just got a pay raise at work to match that. Like, doesn't work that way, my friends. U.S. home prices hit peak unaffordability, with unaffordability reaching levels not seen in decades across some of the most expensive urban markets in the U.S. A housing market rout that began in the high end of markets like New York City and San Francisco is beginning to spread. And as home sales continued to struggle in August, a phenomenon that realtors have blamed on a dearth. You don't hear that word much, dearth of properties for sale. Those who are choosing to sell might soon see a chasm open up between bids and asks, that is, if they haven't already. While home unaffordability is most egregious in urban markets, cities don't have a monopoly on unaffordability. According to a report by ATTOM, ATTOM, which keeps the most comprehensive database of home prices in the U.S., of the 440 U.S. counties analyzed in the report, roughly 80% of them had an unaffordability index below 100, the highest rate in 10 years. Any reading below 100 is considered unaffordable by Adams standards. Based on their analysis, 1/3 of Americans, or wait a minute, 1/3 of Americans, roughly 220 million people. What is the population over here in America? Because that doesn't. Population in the USA. 325 million. Yeah, that's. What the hell is that? Where's that? What is that coming from? 1/3 of Americans, roughly 220 million. That would mean there's 660 million people. That's not right. Anyways, doesn't really matter. The point is, we got an unaffordability problem, and there's a lot of people affected. So let's go with that. Anyways, these people now live in counties where buying a median-priced home is considered unaffordable. And in 69 U.S. counties, qualifying for a mortgage would require at least $100,000 in annual income, assuming a 3% down payment and a maximum front-end debt-to-income ratio of 28%. As one might expect, prohibitively high home prices are inspiring some Americans to relocate to areas where the cost of living is lower. U.S. Census. What's that? You're in California? See one of my many videos. Get the F out of there. Get out of there. U.S. Census data revealed that 2/3 of those highest priced markets experienced negative net migration, while more than 3/4 of markets where people earning less than 100K a year can qualify for a mortgage experienced net positive migration. ATTOM illustrated this correlation between home affordability and net migration in the chart below, which you don't need to see. Rising home prices have played a big part in driving home unaffordability, but they're not the whole story. Stagnant wages are also an important factor. The median nationwide home price of $250,000 in Q3 2018 climbed 6% from a year earlier, which is nearly twice the 3% growth in wages during that time. Looking back, and here's the thing, you can't really compare a $250,000 house that's up, let's say 3% from last year, and then the wage growth is also 3%. Because you're paying for a $250,000 house, or maybe more, $300,000, $400,000 house. That's up 3%. But maybe you only make, you and your wife together, let's say make 100K. And you got a 3% raise. Oh, great, we make an additional $3,000 a year now. Okay, well that additional $3,000 a year may not be the difference. 3% on $100,000 your income versus 3% on a $300,000 house is slightly different. Anyways, um, stagnant wages are also an important factor. The median nationwide home price of $250,000, whatever, climbed 6% from a year earlier, which is nearly twice the 3% growth in wages during that time. Looking back over a longer period, median home prices have increased 76% since bottoming out in Q1 2012, while average weekly wages have increased 17% over the same period. Home prices have increased 76% since the bottoming out in the same time frame. Wage increases 17%. Oh, that's sustainable. Don't worry about it. Just go buy a house, get an equity line of credit, get new kitchen counters, floors, whatever you want to do. Your house is only going to keep going up. You have nothing to worry about. Matter of fact, get an adjustable rate mortgage if you want. And as sure as crap, as soon as you do it, bang, market turns around. Hey, what happened here? 2005, 6, 7, 8 all over again. Which is why I'm trying to tell you. If you're trying to time this, get out of your house. If you're looking for a house, wait. Rent. Now, there's going to be cases where, Joe, that this doesn't work for us for certain reasons. We're staying put. I get it. I'm staying put. I'm not in a hurry to get out of this house. But I understand that this house that I got will most likely be affected if these prices drop. For sure, just like all of them, houses do. So, again, though, I'm not just going to go out and try to time this and do all that. What I'm hoping, though, as I always say, is cryptos, bzzz, housing market, bzzz, final low median, house is paid off, and we're looking at the other property now, whatever. That would be wonderful. Anyways, instead of fighting to overpay for existing inventory, one study showed that, for at least now, most Americans would be better off renting than buying a residential property, according to the latest national index produced by Florida Atlantic University in Florida. Speaking of Florida, my hometown, International University faculty, renting and reinvesting will outperform owning and building equity in terms of wealth creation. Renting and reinvest the excess somewhere else. Oh, like cryptos? They didn't say. However, with the average national rent at an all-time high, American consumers are increasingly finding that there are no good options in the modern housing market, which could be one reason why millennials, despite having more college degrees than any preceding generation... Hey, I'm trying to get rid of all my stuff. What the hell just happened here? Actually, no, those are charts that just popped up out of nowhere. That was weird. Anyways, could be one reason why millennials, despite having more college degrees than any preceding generation, are increasingly choosing to rent instead of buying, even after they get married and start a family. Well, some of these millennials must be kind of smart then. Because you know what I always say, life doesn't stop. You're going to school, we got married, we got kids, you got to get a house. Like, you don't just say, well, watching this guy, JSnip4 on YouTube, and he said, he's making some good points in the stuff he reads. The market's going to go down. I think, honey, I think we should rent. No, people normally don't think that way. You don't even think that that's even a possibility. That's not even going through your mind. When you're ready to get a house, you're just thinking it's time to get a house. You're not thinking about, well, there's business, the business cycle, the booms and busts and all. You're not thinking about that. But if by chance you did find somebody who's telling you about it, and you start researching and you say, you know what, I come to the same conclusion. Why the hell am I going to buy? Honey, if we just wait a couple years, we can rent. We can still have our kids. Family plan is still on, but let's rent. And then we're going to get a fire sale in 2 or 3 years from now, rather than get upside down in 2 or 3 years from now by getting a house too high priced now. And by that time, we'll probably make a little more money. And if the crash comes, the housing, we'll be able to get a great deal, have a lot smaller mortgage than we would right now, like in a lot bigger of a house, better house. Now, if you do that and plan that, good for you. But again, reality says that's not everybody. That's hardly anybody. Because most of these people are young. When I met my wife, we were young, we had kids, and we're in our 20s. I don't know this stuff. I didn't learn all this stuff then. But in '05, I mean, I started paying attention. And, you know, here I am today, 13, 14, whatever years later, um, 13 years, I guess, later, well aware of it. But I mean, I'm 40 years old now. I'm not in my 20s anymore. I wish I had this information when I was in my 20s. I'd have made, some better decisions based off of this kind of stuff. But it is what it is. You learn from it and you move on. And I'm hoping there's some of you out there that are listening and take some of this into consideration, because getting a house is not something you just get in and get out of. Like, it's a big deal. But you want to capitalize when you can. So, anyways, last video. I'm done. Take care.